All right, welcome everybody. We are back again for our weekly recap. This is going to be the recap for the live chat room for the week ending on 4/16. And this week we're going to be talking about behavioral patterns. What are behavioral patterns? You've heard me mention them before. But what are behavioral patterns? Because most of you have never heard of it. Probably I've never seen it in print. I've never seen anybody talk about it. But back in 1989, I discovered what I call behavioral patterns. So I want to talk a little bit about that. And more importantly, I'm going to show you how you can spot them as well. So you can start trading some of these behavior patterns yourself. All right. But before we get into that, as always, let's take a look at our recap for the week. Let's see, how did our CB trades do? How did our PAP pattern do this week? Once again, all I traded this week was on the yen, the US yen. So let's look at those stats and then we can get into talking about behavioral patterns. All right, so here we are. This is going to be these are going to be the naked setups only for the US yen. Once again, all I traded was and tracked was the US yen this week. This coming week, we're going to be moving over to the Euro US. Probably just trade that for a couple weeks. All right, these are going to be the naked stats, and this is only on one of our patterns called PAP, P-A-P. Naked means if you were to blindly trade, okay, a setup without taking into consideration some of the other things that we teach. There's more to making a trade than just blindly going in and taking a signal or setup just because it presents itself, okay? That's too mechanical. We have to look at other factors before we make that decision. But the point being, the reason I'm showing this is because there has a very strong tendency most of the time when we take a trade, our very first trade tends to be a winner, okay? Irregardless of other factors that we can use to improve on that, okay? So the point is we're putting the odds in your favor right out of the gate, even if you're not good at using the other tools and learning how to read the markets and so forth, which is all part of being a successful trader. We're still going to help you put the odds in your favor. Whether you're a beginner or you're a novice, it really doesn't matter. We're going to help put those odds in your favor, and that's what these stats are showing. All right. So for the week overall, we had 71 morning trades, 23 night trades. We were hitting at 77% on our win ratio there. Once again, keep in mind, these are naked stats. These are just taking the buy and sell signals as they present themselves without any additional filtration. We do not recommend you trade these in that kind of mechanical fashion. Trading in a mechanical fashion will not work. All right. That's why these trading systems that people sell, where they tell you exactly where to buy and sell, they don't hold up long term. It's too mechanical. All right. So that being said, 77%, 61% at night. But as you take a look at our stats, we can still do very well at 61%. Because once again, what are we doing? We're not taking every trade. We are filtering out the trades, right? When it comes to actual trading. But nonetheless, still better than half. Still putting the odds in your favor, even at night. But overall, most of the time, you're going to see it running somewhere in the 70s, between 70 and 80%, which is just amazing in the sense that these are behavioral patterns. These are all based off of behavioral patterns, which we're going to be getting into in just a minute. And you're going to understand why not only do they hold up, but why they should continue to hold up. Real important factor when it comes to trading. You got to believe in the tools that you're using. You got to believe that you're using the best tools. You got to believe in those tools so you can continue to pull the trigger. Nobody's going to be able to do that using indicators. All right. If you want to try it, go ahead. But my 40 years of trade, never seen anybody successfully make money trading indicators. All right. That being said, first trade out of the gate. Once again, this is just very first trade. You can see 60% in the morning, 80% in the evening. Overall, 70%. Not bad. Still, once again, this is taking the very first trade. So where my first trade may come in at 805, You could be trading the euro at 8.10 and maybe your first trade is a winner and I'm a loser, and or vice versa. That's not the point. The point is that typically we can put the odds in our favor on the very first trade out of the gate. That's a confidence builder in order to pull that trigger when you begin trading, okay? Odds are in your favor. All right, so let's go down and see how CB did. Once again, CB only trading the US yen, was not trading any other pairs, okay? And the idea here is this is a great way for people that don't have large accounts is to trade, as I mentioned last week in my video, just trade one pair. You don't need to be trading two pairs, all right? You can do very well just trading one pair, and that's what I'm trying to show. And it's not just the US yen. It's not like you can only make money in the US yen, all right? Every single one of these have a little bit different personality. So we're going to trade the Euro US coming into this next week. It does have a little bit different personality, but this is really important because at some point down the road, you may want to trade two pairs. You've got to understand the difference in the personality between the yen and the euro because they are going to be different. All right, so this is great training. Nobody offers you this kind of training. Nobody has a chat room that is open as long as my chat rooms. No trader spends as much time in their chat room as I do because I am a trader just like you. All right, we're not pushing systems, we're trading. But I'm going to teach you after 40 years how to do this and do it the right way and dispel a lot of that crap that's out there right now. Excuse my language, but it is crap. So we're going to be talking about behavioral patterns. Behavioral patterns are something that I tagged back in the late 80s. I've been talking about them ever since. Don't think anybody else talks about them. So you're going to learn it here first. You're not going to see it in some book, all right? And you're not going to be seeing it on some YouTube unless somebody's trying to copy my material. But nobody has talked about this, all right? And I've been talking about it since the late 80s. So let's get into it. Let's talk about behavioral patterns and what are behavioral patterns. Okay, so first of all, let's talk about what are behavioral patterns. What is my definition of a behavioral pattern? My definition of a behavioral pattern, they are predictable emotional reactions on a mass scale to a particular event. All right. So as an example, I've talked about this before. We talked about the burning building scenario. If you have a burning that goes up on fire, you have a fire in the building, it's pretty predictable that the majority of the tenants that are in that building are going to get out of the building, right? They're going to move out of the building. They're not going to stay in the building, right? Because we have a particular event, which is the fire, okay? And we know that when there is a fire in the building, the majority, assuming that they're even aware of it, are going to move and get out of the building, right? So that is a very predictable behavioral pattern. There's lots of behavioral patterns. You see a car coming at you and you're in the middle of the street, you're going to move out of the way. That is a predictable behavioral pattern, right? So we know that they exist and we know that they can be predictable, right? We can predict with a pretty high degree of accuracy because we know how people are going to react, not only individually, but on a mass scale. Really important. So the question is, well, how do you use that when it comes to trading? And I'm going to show you how to use it when it comes to trading. But what we want to do when it comes to trading, okay, we want to look for unusual price structures. And then what we want to do is once we find these unusual price structures, we want to analyze how the majority of traders reacted to it. Now keep in mind, most of the reactions are subconscious, so they're not even aware of it, all right? We're aware of it, and I'm going to show you how to become aware of it so we can take advantage of it. But when certain patterns or structures, okay, of price movement, when we have certain structures in price movement, when they occur, there tends to be a reaction to that is at a subconscious level, all right? And we want to take advantage of that. So let's look at one such case of what is an unusual price structure, all right? So let's take a look at a chart here, and I'll show you what I'm talking about. Keep in mind, there are probably hundreds. We've identified quite a few. There are more to be found. It's going to be something that if you are a trader and you want to be successful, I suggest you spend time looking for these setups, looking for these patterns. They are there, and once you find them, okay, they're highly predictable, and that's what's going to help put you guys on the winning side of trading instead of on the losing side of trading, trying to trade all this other junk that's out there. All right, so let's take a look at a chart here. Okay, so here we are. Let's take a look at what I consider an unusual event. Now you see, we're back to just a regular bar chart. No candlesticks here. I suggest if you start to do any kind of analysis, this is probably going to be a good place to start. All right, just going back to regular bar charts. Okay, because there's four things that are important to us: the high of the bar, the low of the bar, the open of the bar, and the close of the bar, right? The only difference between that and candlestick is they fill in the difference between the high and the low, the open and the close, right? And where they're closed up or down, right? That's the only difference. But to find these patterns, I think you're going to find it a lot easier to go back and analyze it without looking at candlesticks and using just regular bar charts. But that's me. That's what I found to be the easiest, okay? So let's look at what we consider an unusual event, okay? An unusual event is, see where this arrow is right here? Let's say that we're trading, okay? Let's just say our day just finished, okay? This is a daily, let's see, this is a daily chart of the US yen, all right? This is on a day-by-day basis, all right? So what's unusual about this particular day here where this arrow is? Well, if you look at it, you can see the high of today closed lower than the prior high, and the low of today closed higher than the prior low. We call that an inside day, right? It's inside the high and the low price range of the prior day. Our high and our low today is less and or greater than the high and the low of the prior day. How often does that happen? It doesn't happen that often. In most cases, it's not going to be a situation where you're going to be sitting inside of the prior day. That is an unusual event. The next question is, how do you trade this particular unusual event? Well, that's something I want you to go back and find and analyze, because what you're going to see here is that it doesn't happen that often, but when it does happen, you're going to want to take a look at several things. What was happening over the last 2 to 3 days, all right? Because what's been happening over the last 2 or 3 days is going to give us some indication of what's going on this inside day, so we can go ahead and take advantage of it tomorrow, the following day. What can we do with the inside day to take advantage of it on the following day? All right, and that is where the analysis comes in. So what you do is you identify, you go back, and it's almost impossible to do it. You can do it visually, you can do it by hand, but there's good software out there right now where you can go ahead and you can put in those parameters, and you can go back and you can analyze that, okay? You can say, okay, I've got an inside bar. Well, let's see, the prior bar looks like it closed higher, which was then higher the prior day. It looks like it's on the uptrend. What does that tell me? How am I going to trade that inside bar? Because something unusual is going on, because it's not you. I don't usually have inside bars. How is that going to help me? Okay. The other scenario, here's one more for you, would be an outside bar, which doesn't happen very often. And an outside bar, this is an outside bar right here. So today's action means my high is higher than the prior day, and my low is lower than the prior day. That's a very unusual setup. Okay, because of that, we can take advantage and we can find out what is the best way to trade an outside day, right? Because that typically doesn't happen. Typically, once one side of the prior day's high or low is penetrated, it does not turn around and penetrate the other side. All right? Little tip for you guys. So you can see we penetrated the high to this day right here. Penetrated the high, penetrate the low. This day penetrated the low, didn't penetrate the high. This was an outside bar, penetrated both of them. Okay, another nice little outside bar. Takes out the low, penetrate the low, didn't penetrate the high, and on and on and on and on. Okay, so this is what you want to look for. You want to look for unusual patterns that occur, and then you go back and you find and identify all those, and then you do your analysis. And once you've come up with what you think, okay, is a viable strategy to trade that setup, then start looking at it. Is it true, and will it hold up in other pairs? Can you trade it in the Aussie, the Aussie US, or the Euro US? Can I trade it in gold and silver? Can I trade it in stocks? When you find you have a pattern that's reliable across the board, you've got a very strong behavioral pattern. You want to see it work in other, right, instruments, not just the US yen. So that's real important. All right. So you guys are serious about trading. This is what I would be looking for, because nobody's trading like this. And if they are, they're not talking about it. This is what you want to look at. Okay. And this is how you find them. You look at it and you find those unusual situations. So here, if you're sitting right here, okay, going into tomorrow, and I'm looking at this inside bar right over here, this is going to tell me something, right? This is going to tell me something about what's going to happen tomorrow. And this is all really important. So start doing your analysis. Get those programs running. Start looking back. This is what I teach. We have some very, very strong behavioral patterns that I teach in my core class. And then we build on that, and we teach you how to not only trade them and identify them, all right, but also how to start looking and finding similar patterns as you move forward in your trading career. Real important, because there's a ton of patterns, and we find patterns I would say at least once a month, we find another pattern that is just continues to hold up over time. And so there's a lot of them out there, folks. You just have to take the time to start looking at them. But I can give you a head start, give you an idea of what to look for. And then from there on out, it's just a matter of you doing your time and research and putting the time into it. Because whatever you put into this business is what you're going to get out of it. Don't rely on me. Don't rely on some guru to give you signals. Okay, that's a losing strategy. If you're looking for a mechanical approach to trading, that's a losing strategy. Nothing about what I teach, nothing about what successful traders do is mechanical. It's going to require not only tools, these are very, very good tools, but you as a trader are going to be the one to decide whether you are successful. Being a successful trader or not a successful trader depends on how you use those tools. All right, we can give you the best tools. You're still going to have to put in your time, and you're going to have to put in your screen time, more importantly, and you're going to have to practice and learn how to use those tools. That's what's going to make you successful. Anybody that promises you anything else, they're lying to you, because they want to sell you something and they want it to sound like it's easy and it's mechanical. It's never going to work that way, folks. It's just not going to work that way. You can't depend on a mechanical approach to hold up, because markets don't work that way. Every single market is interrelated, okay? How gold affects silver, or silver affects crude oil, or crude oil affects the Canadian dollar. It's all one big, this is a global thing. This is you have to look at everything holistically. It's holistic is the word I'm looking for. You have to look at the markets holistically. Once you can start looking at them holistically, then we can take these patterns and we can go ahead and we will know when a particular pattern's going to be reliable and when it's not going to be as reliable. Okay, very important. So Not going to happen mechanically, all right? But this is a good start. Start looking for behavioral patterns. Get rid of those stochastics and those moving averages and all that stuff. If you want to use them, ask yourself, are you making any money? Look at your account. Is it making money? If it's not making money, that tells you something, right? So this is a different way of trading. This is the right way of trading. Behavioral patterns are predictable. They'll continue to be predictable. So why not base your trading off of something that makes sense and is going to hold up over time compared to some moving average that just happened to work great over the last 10 years and it won't even hold up 30 days into the future. Trust me, we've looked at that. So that being said, hopefully this will get everybody started on the right track. We'll be talking more about this as we move forward in some of our future videos. But that being said, this week I'm sticking to just the Euro US, and I'll be doing that probably for 2 weeks. We'll see how we do, just sticking with another single pair for the next couple weeks. Looking forward to that. And until then, if you have any questions, go to my website, binaryprostrategies.com. Shoot me an email. Make sure that you get on my email list so I can keep you up to date on any new videos, any new training that's going out. We have a Q&A coming up pretty soon. We also have a nice little workshop that we're going to be putting together. I'm going to be doing a little bit of training, giving you some ideas on how to trade and so forth, which should be really good for those that are looking to trade these binaries, but giving yourself a little bit of edge. How do we give ourselves an edge? We're going to be talking about that a little bit as well. So that being said, everybody have a great trading week. I wish everybody success. We'll see you next week at the next weekly recap video. Take care.